Good evening, everybody. Just depending on which part of the world you're in. So we're now going to have a look at the Hong Kong 50 chart or the Hong Kong 50 index, right? Yeah, so let's look at the chart. So as you guys can see, I am on the monthly chart, and we can already see that in regards to the monthly chart, we have some very interesting candlesticks. Number one, we have this candlestick at this point. It is a liquidity candlestick, which tells us that at this level there's a lot of money sitting here which needs to be grabbed by the market, right? Number two, we also have this candlestick as well. It's very much similar to this one in that it is also carrying a lot of liquidity where it ends. So what this tells us is that there's plenty of scope for price to move further down to actually grab all the money that's sitting at this point, and then from there we might possibly see a reversal of sorts, right? Number two, we also have this candlestick over here, which is a liquidity candlestick as well, and it tells us that indeed we will see price at some point reach this level to grab that liquidity, right? So from here I'm just going to head down to the weekly chart. So here we are on the weekly chart, and on the weekly chart we can see that the current week's chart, or rather the current week's candlestick at this point in time is a bearish candlestick. However, it hasn't closed. However, should it close as it is, that would mean that we would have a lot of liquidity that's sitting at this point as well, and that would mean that the market would have to come down to this level to grab the liquidity as well, right? Anyway, let's proceed. So what else do we see in regards to this chart, which is the weekly chart of HK50? What else do we see that we should be paying attention to? Let's have a look. Let's see. So we can see that currently the market seems to be rejecting at this level, and should the current weekly candlestick close above this level, we might potentially see price move further up, and that is because we can see that we have the formation of a very nice W structure at this point, and we also know that when it comes to W structures, a lot of traders and investors buy on that second leg of that W structure, right? However, having said that, just keep in mind that the market may actually create a trap. The market may be creating a trap because, as I said, those who control the markets know that we retail traders buy and sell based on second legs of M and W formations. So they know that at this point in time, a lot of us are buying at this point as the anticipation, or rather we anticipate that the market will move further up. But what may actually happen is that the market from where it is may move up slightly, only to push further down to trigger all of our stop losses, because remember, we buy on second legs of W structures and then we put our stop losses below, right? So which means we would have stop losses at this point, and the market would push down to trigger all of our stop losses, and then possibly push further down to trigger the liquidity that's sitting at this level, and then from there we might possibly see the market give us a very nice W structure in this manner, right? I hope that makes sense, guys. Anyway, at this point I'm only speculating. I'm not saying that that's how things are going to unravel over the next couple of weeks and months. I'm just showing you what could possibly happen, right? So let's proceed. So from here, I'm just gonna head down to the daily chart. However, before I do so, let me just also point out that we had a very nice M structure over here, which has a neckline at that point, right? So this level over here is a very strong level of resistance, and that we might possibly see should the market push further up, and after closing above this other very strong resistance level, we might see the market push further down from here, right? Because when it comes to M structures, as I've said countlessly, guys, that we would love to see price come back to the neckline to test it and then push further down, right? And we can see that the neckline at this point, its neckline has not yet been tested in any way, right? So we just need to keep that in the back of our minds as well as we proceed, right? So what else do we see on this chart that we should be paying attention to, that we should be looking at? I don't see much really on this actual chart, but what I will do from here is head down to the daily chart. So here we are on the daily chart. On the daily chart, the first thing that I'm going to do is just add my my daily channel. So just bear with me, guys, as I add my daily channel. Let's see, have a look. So there goes our daily channel, more or less, right? There goes our daily channel, and we can see that we are in a downward trajectory, right? Which ties in with, if I can just go back to the monthly chart, which ties in with the fact that we have, as I said, these two candles, this one as well as this one, which need to be grabbed by the market, because as I've said, there's a lot of liquidity that's sitting at this point, right? So chances are we might see the market continue further down, as opposed to continuing up, as much as we have that W structure on the weekly chart, right? Anyway, let's proceed. So what else do we see on this chart that we should be paying attention to? Which is the daily chart. Let's have a look. So on the daily chart, I can see that we also have an M structure at this point over here, which has a neckline at this point. And as I've said, guys, that when it comes to M structures, we want to see price close below the neckline and then head back to the neckline, and then push further down, meaning that we would look for selling opportunities at this level. Similarly, we can see that the neckline had been broken and price went back to the neckline to test it, and we see that price seems to be rejecting at that level, and it means that we should be looking for potential selling opportunities at that level. We should be looking for potential selling opportunities. We're not just going to sell, we're going to look for confluence, we're going to look for other reasons for why we should be selling at this point. And should we get an entry, we would sell and hold up until price, in my humble opinion, reaches this level over here, at least this level over here, because there's a lot of liquidity that's sitting at that level, right? Anyway, let me go back to the daily chart. Before we continue, I'm just going to add a neckline to that M structure. It's very important. It's very, very important. Just bear with me. So there goes our neckline, more or less, right? The next thing that I'm going to do is to utilize the Fibonacci retracement tool. Ideally, I would love to see the neckline of that M structure align with one of the key numbers that we have on the Fibonacci retracement tool. So just bear with me, guys. There we go. So we can see that the neckline of this M structure aligns with the 23.6% Fibonacci retracement level. Ideally, I would have loved to see price actually at least reach the 38.2% Fibonacci retracement level, because I believe that the 38.2% Fibonacci retracement level is much stronger than the 23.6. However, it is not as strong as both the 50% as well as the 61%. These two are the most important, in my humble opinion, and the most reliable. Nonetheless, we can see that price has retraced to a key level or a key number that we have on the tool, and in a way it does signify that we should potentially be looking for selling opportunities, potentially. Anyway, let's proceed. So what else do we see on this chart? I don't see much at this point in time, so what I will do now is head down to the H4 chart. On the H4 chart, I'm just going to fix my channel just to ensure that it is up to standard in as far as accuracy goes. So just bear with me, guys. Let's see. There we go. Right. Let's see. So what else do we see on this chart? Let's have a look. In fact, before we proceed, the first thing that I'm going to do in regards to the H4 chart is add my H4 channel as well. So just bear with me while I do so. just bear with me, guys. I would add my H4 channel in this manner. Let's see, let's have a look. There we go, more or less. There we go, there we go, there we go. That should be fine. There we go. Right. So remember, guys, that on the daily chart, I'd said that, or we had said that we have this very nice M structure, and we have the neckline of that M structure at this point, and I said that the or rather price at this point in time is testing a very key Fibonacci retracement level, and that we should potentially be looking for selling opportunities at this point, right? Anyway, let's proceed. So as much as we have that M structure and the fact that price at this point in time is testing that neckline, bear in mind that we also have this W structure over here, which has a neckline at that point. So we have a bit of a dilemma because we have two opposing structures. Number one, we have that huge M structure, right, which has a neckline at this point, and number two, we have a smaller W structure which also has a neckline more or less at that point. So can you guys see that we have two opposing structures which have necklines in more or less the same area, right? We have two structures that have necklines in more or less the same area, right? And I think it would be a bit risky in as far as buying or selling at this point in time on the H4 chart. However, I believe that one could get away with it if one were to look for selling opportunities on the H15 chart, as well as the H1 chart, and those that are, below those charts, right? I think one could get away with it. But in as far as buying or selling on the H4 chart, I would not recommend it, right? Anyway, I'm just gonna add the neckline of the W structure as well, because it's very important as well. There we go. Can you guys see that? Can you guys see that we have, as I said, two opposing structures which have necklines in more or less the same area, right? So buying or selling on the H4 chart would not make sense in my humble opinion. However, let me go to the H1 chart to see if we can possibly get away with this. Let me just fix my H4 channel, just bear with me. Alright, so we are on the H4 chart, and on the H4 chart, sorry, the H1 chart rather. So on the H1 chart, we can see that price has created what seems to be an overextended M structure which has a neckline at that point, right? Should price close below the neckline, I would wait for it to head back to the neckline, and I would most likely look for selling opportunities at this point, but not on the H1 chart, but more on the 15-minute chart, or the 30-minute chart, or the 5-minute chart. And my take profit should be this level over here because of this W that we have, right? And as I said, we might potentially get a reversal at this point of price, because when it comes to W structures, just like with M structures, when we have the neckline broken to the upside, we expect price to come back to the neckline and then push further up, right? But having said all of this, guys, just to go back to the daily chart, in fact, let me go back to the weekly chart. In fact, no, the daily chart is fine. On the daily chart, I'd said that because of this bigger MW, or rather this bigger M structure, and the fact that on the monthly chart we have, just bear with me, on the monthly chart we have these two candlesticks which are carrying liquidity. My bias personally is for the market to continue to move further down to grab all of those levels which have a lot of money trapped that where they are, and we might potentially see the market push up from there, right? So that is my bias. So in other words, I would not place too much emphasis on this W structure. Having said that, at this point in time, the world is pretty much unpredictable, and we don't know what's going to happen, because we also need to pay attention to the fundamentals. And as much as my bias is for price to continue to move further down, it is also quite possible the price may come back to this level, which is the neckline of this W structure, and then push further up. Because also when you look at this actual chart, we have this candlestick over here. It's also carrying liquidity at that point. Similarly, we have this one as well. It's also carrying liquidity at that point. So there is scope for the market to move further up. There is scope for the market to move further up. Right. So that is my analysis in as far as Hong Kong 50 goes. I hope it makes sense. I hope it is not too confusing. If you have any further questions, just drop them in the comment section, and to the best of my ability, I will try to address those questions. Peace out, guys.